All right, guys. Round two, episode two, lesson two. This is Thursday. Risk management. Where do we place the stop losses? Why do we place the stop losses where we place them? What's a better location than the others? All of these questions are all about risk management and how much you're willing to risk and how far you're depending to place your stop loss is all important. Some guys like their stop losses tighter. Some traders like their stop losses wider. Depending on how wide you go and depending on how short you go, it's all up to you on how much you risk inside those parameters or that distance of a stop loss. So that's why it's important to understand market structure. Just like we went over the last lesson, it's all about market structure. Where you place your stop loss is dictated by the market structure that you're working with and what's in front of you. So we're going to go over some of those conditions, and I'll explain to you why I space out my stop losses the way that I do. Why my stop losses are a bit wider than most traders in the futures market. But it's also why I have an 80-90% win rate, because I allow the trades to breathe versus chasing an R multiple. I allow the trades to breathe, and I just keep my multiples modest. All you need in this trading world is a 1 or 2, 1 or 3, constantly, back and forth. If you catch a 1 or 10, 1 or 15, 1 or 20, good for you. I personally don't care about it. My meat and potatoes of everything that I do is 1 or 2s, 1 or 3s. And that's why I don't really care about higher R multiple, because my win rate is so high with the 1 to 2, 1 to 3.
Right.
You get what I'm saying? Like, everybody gets it confused thinking, oh, just because this trade over here is doing a 25R, that he's a better trader than the guy doing 1 to 5 or a 1 to 2. No. I guarantee you that before that guy took that 1 to 25, that 25R multiple, he'd probably had 5 L's before he got that 25R. It's almost guaranteed. Versus what I'm about to show you how to do is to take less L's and take more wins with a double or triple multiple. And that's all you need to stay in the game for the long run, versus getting taken out and having your psychology messed with just because you're getting, because every time you take an L, your psychology goes into shambles if you're not experienced. But if you are experienced, then it bothers you less and you're able to manage it better. So you guys have any questions about that? Like the thinking about it, the logic of it?
Mm-hmm.
All right. So let's get
Math
into the
checks
market.
out. Math checks out.
Yeah, it does, right?
Yep.
All right,
You
so
win
let's
like
get into making it very simple. Why does Coach Blue play stop losses the way he does? We're gonna get into that right now. It's like I said before, it's all about market structure. All about what the market structure is telling me. We're coming from this low, we created this high, we made this higher low, now we got this higher high, and we got this higher low, right?
all right.
What, how do I know, how do I not get clapped, but still enter this trade? That's a very important question, guys. How do I, how do I wait for the market to come to me here and not get clapped and allow this trade to breathe long enough so that I can stay in for this? Because we do this a lot. As an example, we do this a lot. This may not be the example, but we do this a lot. The overall aspect of our trading in the VIP room. We catch these all the time. Don't we, guys? Oh, sorry, guys. That's a silver alert. Shit's going good. So back to this. The reason why we can catch this and not sweat is because I'm going to help you guys understand why market structure is so important when choosing a stop loss. You want to be able to get in here, but also not get clapped because it's pulling against you. You get what I'm saying? That's the important part, right? The only way you're going to know where to place your stop loss is by looking to the left. The first way. This is the original way. You have to look left in order to gather the information of where you're going to place your stop loss. You can't just say, I want to get in this area and my stop loss is going to be 50 ticks. Good luck, sir. You're about to get clapped multiple times. That's not how it works. So what you got to do is really look at market structure. This was the last low here, right? First thing you do is go to the left. This is the last low, so we're going to figure that, we're going to highlight that as the swing low, right? We know this already. Second thing we're going to do is understand that, just like how we went over yesterday, this is a break of structure over here, right there, right? Let me play this back also, so we understand where we're going and how to place. This is a break of structure right here, guys. Boom, right? Now, what we need to find out is where do we want to enter and where do we want to place our stop loss, right? That's what this is all about. So from here, we know that in this general vicinity is where we want to enter because this was the break of structure. What does price want to do after it breaks structure? What does it generally like to do?
Retest.
It likes to retest the break of structure. So you can enter somewhere in this area, right, guys?
Right.
And you don't have to like, what's the word I'm looking for? You don't have to overthink it. Because generally speaking, price will always retest the break of structure at some point in the near future. You don't know when. All you can do is prepare and be in the right place at the right time.
Right.
So for me, at this point, you guys already know, what am I going to take out next to find an entry level? Fibonacci. So we're going to go from point A, which is the low. We're going to go to point B, which is the high. And I forgot to mark that, but I'll mark it right now for you guys. Swing high. Boom. Very nice and simple, guys. No rocket science, right? What is this 618 lining up with?
The level.
Break of structure.
Yep.
Again, I don't know anything, like I said yesterday. I allow the market to tell me what to do and what to think. All I do is I approach it mechanically and technically as a technical analysis, and I accept what the market is telling me. Now, I don't know about you guys, but if there's a 618 lined up with a break of structure, does that make you excited or does it not make you excited?
Yeah, pretty much.
It makes me excited. So now the tricky part is here. Okay, now I see my entry area. Where do I place the stop loss so I don't get clapped and catch the ride? And not only that, I also have to plot my exit, right? Two very important things. Actually, three very important things. Where to enter, where to place the stop, and where to exit, right?
Mm-hmm.
So we're going to agree that this is the entry area right here. Right here, you have two levels. You've got the break of structure level, which you could take your long positioning tool, right, and place it right here. Or you could place it here at the 618. The choice is yours at this point. This is your entry area. This little section right here is your entry area. That's your zone. That's your zone. Right? So we've got an entry But we're focused on what today? All about what?
Risk management.
Risk management. Where are we going to place that stop loss so that we are still in the game and we don't get clapped? You have two choices. You have two choices here, right? When you're choosing these choices, you also have to look and be very detail oriented on what's to the left. What's all of this over here, right? We've got order block over here that's been ran, right? Boom. We've got an order block here that's technically been ran as well. But price could do whatever it wants and it could come back and retest that. What we want to do when we're thinking about where to place the stop loss is it's all about staying out of the fire.
Someone's audio is loud. Not sure who it is. It's
They
interfering with you.
They muted it. I think it was this.
There you go.
So we got the entry, right? The important part about the stop loss is all about staying away from the fire. The fire is all in here, guys. This is where all the fire is. This is where you get burned. So if you place it too close, you can get burned. You get what I'm saying? If you place it where you think it's far enough, you can still get burned. But if you understand how to read what's on this side, you can make better choices. Because this little wick right here would tell me this may be a good section right here to leave the stop loss, right? It's maybe a good area to leave the stop loss. Because I'm reading the details on this 1 hour chart. It's maybe a good area. So we've got a low here technically. And we're behind the 786, which generally speaking, markets like to come in. Like if they pass the 618, they'll generally come in and do a full extension to a 786 area, and then they'll go. Like you guys have seen it plenty of times. So you've got this area. This is a comfortable area. And then you've also got the main area you always look at first, which is the last low, all the way over here. The thing about placing your stop loss all the way over here is that this is an extremely wide stop loss. This is 1,500 ticks. Like that's going to cost you. You know what I'm saying? So in order to refine it, you use market structure that's to the left to see if you can take advantage of any lows or any market structure that's over here, any wicks that you can hide behind, like this one right here. And this wick hiding behind this, just like that, it's far enough. We're looking at 800 ticks right there. And we're behind the 786, right? It's still a pretty big stop loss. Still a pretty big stop loss, but this is a big play. Like look at how far, look how big this leg is right here. Do you not think that when it gets in here, it's gonna want to do some extra dipping? You get what I'm saying? Like we may have a problem here if we enter right here at the 618, which we will. We may experience some drawdown, or we may go into instant profits. You never know until price gets there. But your job is to be comfortable enough with the risk that you apply in here. And if you're not comfortable with it, don't place a limit order. You're going to have to wait for market structure to form on the bottom, on the lower time frames, and start confirming that it wants to go up. Then you can enter. But if you're trading with limits, like how we always trade, especially me, I don't even wait for all that stuff. I'm already making my analysis. I apply the limits, I accept the risk, and I go. That's why it's important, and that's why I'm so good at allowing the trades to breathe. But you have to be willing to accept that this can be a losing trade. It doesn't matter if all the stars align. You can have an A+ setup in front of you, and you can still lose just because you misplaced the stop loss. Or you were just wrong in general. It doesn't even, you're just wrong. Being wrong is part of trading. Taking losses is part of trading. If you don't accept losses, the market is not going to reward you ever, because you're not ready to. You're not there. If you're not ready to step in the fire, the market is always going to take it from you because you're always thinking about it. But if you are accepting losses, like it's nothing, eventually you're gonna see that it just becomes easier because now you're not shaken by the L's you're taking. All right. You're not shaken by the L's that you're experiencing because you've already accepted the loss before you've entered the trade. All right? Does that make sense, guys? I'm gonna say yes.
Yeah. Yep.
All right. So
Yep.
after you've determined your risk and where your stop loss is gonna be, we're gonna choose this right here and see how this works out. See how this works out. This is an 800 tick stop loss. We also need to find out where our exit is going to be before we enter anything. And our exit, you can use any, you can use the market structure here. You can exit here. You can exit here. This right here is a 1 to 4 trade. We do things like this all the time. The signals in the VIP are generally 1 to 2, 1 to 3. But for those guys that hold all session, you could get a 1 to 4. But 1 to 2 or 1 to 3 is all you need in this game. All you need.
Blue, are you with your experience now, are you noticing a lot of market structure doing a swing low before it does the move? Are you noticing that? You see how your
What do you
swing low, you made a notification, not a notification, but you made a note there. I'm noticing, at least with the plays I'm taking, I'm noticing it eats up and then does the move. So they call it a swing low. So I'm asking you, with your plays, are you noticing that, or are you
No, we don't
noticing
get
it the
that.
786 bear?
Yeah, no,
Bear down.
we don't get those problems much where like it comes to us because it's not the way that I'm analyzing the market, I'm staying away from things like that. Like what you're
Okay,
referring to is a situation like this right here, where like let's say this was the setup here, right?
correct. And
And then
it did the
it
swing
came
low
in,
there.
it ran, and then it
Swing
did
low
this.
before the move.
Yeah. These are the things I stay away from
Okay.
because the
Higher
main
time
reason
frame.
why and how is because I'm always on the higher time frames looking at the bigger picture.
Got it.
So I stay away from things not that it hasn't happened. It's happening before. It's happened. Market
Yeah.
structure repeats itself, higher and lower time frames no matter what.
Hmm.
But more often than not, we don't experience that because I'm always on the higher time frames looking at the bigger picture. And for this to sweep all the way down here, that means I wasn't reading the market right in the first place.
Okay.
That means I should have been shorting instead of looking for long. So I was completely wrong and I misanalyzed the market,
Makes
which
sense.
I rarely do. The only reason I get a bias is because I go to higher time frames and I read higher time frame market structure, and that's what tells me the bias. Then I go into lower time frames and I use that bias as an approach to my analysis, and I only look for the direction that the higher time frame told me to look at. So I don't get caught in these lower time frame traps. That's why we
Okay.
don't catch L's left and right. We catch dubs left and right because
Hmm.
we're always waiting in the trees. We're not in the bushes. I
That
mean, we
makes
snack
sense.
in the bushes, but we're outside, like looking at everything with an eagle eye perspective. So it's
And
smoother out here, less traffic, and we're just waiting to get picked up, like so. And that's why you'll see like an 800 tick stop loss on futures, and some cats would be scared of that.
that makes
There's a lot
sense.
of cats be scared of that because most cats on futures they're trading with like 5, 10 tick stop loss. You know, and they're doing their thing. I just don't trade that way, and I don't care to trade that way because it's not my approach. My approach is a lot smoother. It's more chill. It's better on the freaking psyche
Yeah,
with less L's and more dubs, and you get to just like when you're in action and you gain enough experience like I have, you're a lot more calmer when you're taking entries like this.
I agree. Okay, perfect. That answers that question for sure.
You know? So we've agreed that this is where we're gonna place the SL, right?
Mhm.
So right here is that little wick right there that we're using as like a little advantage as because being detail oriented in trading is very important. So you got to look at things like this. I don't know if you guys can see it on the screen, but I'll make it bigger so you can see why I'm looking at that. This is basically an order block.
I was just gonna say, yeah.
You know, this is a 1 hour order block right here. Just chilling out there. It was like we could have dismissed that. Could have dismissed that and just gone all the way down here for this 1500 tick stop loss, which I don't do. I don't do. That's why I take advantage of this 786 situation. And if the 786 highlights market structure like this, we take advantage of it by using a shorter stop loss. Does that make sense?
Yeah.
It helps us agree to use it gives us the confidence to use a smaller stop loss because we see market structure is in the way if price does get here. Price does get here, we have, like how I was saying yesterday, lines of defense. You get what I'm saying? So let's see how this plays out. I'm gonna just play it for a little bit and see how it plays out, see if it works. And we're just waiting. Each one of those candles are 1 hour. We're not waiting in front of the chart. So we got in there. Boom. What did price just do?
Respected the 1 hour order block.
First of all, but look where the
786.
wick, look where the wick tapped on that 786, guys. Do you guys know how I found this out?
That's wild.
Because this isn't a thing out there. This isn't a theory that people use out there. This is just something I came up with throughout the years of experience I've been dealing with. The reason I figured this out is because I was using tighter stop losses and I kept getting tapped. And because my fib is always placed, all those L's that I took, I would go back and realize that price was just really extending. It's not that I was wrong, it's that my SL was too tight and price just needed an extra, it needed a deeper extension before it returned, before it continued, rather. And it was the 786 level that was always doing it. It was always tapping into there and then returning. Because if price decided to do this instead and keep going, I no longer, this is invalid. It's all invalid anyway. That's why you place the stop loss here, so that it can catch the invalidation in time and you stop bleeding. This is a stop loss. A stop loss is to stop your losses. That's what a stop loss means. So that you are already agreeing to lose whatever this drawdown in red is. When it gets to this level here, you've already accepted the fact that you're going to stop losing in the market right here, and the market can continue. That's what a stop loss is for those who don't know. It's just to stop losses. You get stopped out, that's why we use stop losses. A lot of cats don't use stop losses, and that's okay. I used to be one of them. I no longer do that. I'll never do it again. So back to this. This is a perfect example of how this works out. So now we're in the trade, right, guys? What are we doing now that we're in the trade and we're back in profits? Mind you, we held 1, 2, 3 hours in drawdown. So that takes a lot of patience. The only thing that's going to help you with that patience is the fact that you've already marked out market structure to the left. That is a line of defense, along with the 786 as a line of defense. If this candle would have came down here and force closed down here in a large candle, that's it, man. I'm out of here. Fuck it. There's no reason to keep holding on to that trade, though. You get what I mean?
Your analysis is wrong at that point.
Yeah, like it could
Just
be
once.
wrong, or it could just want to do a complete retest here of this level just to double bottom it and then go up. It just sometimes it does wild stuff like that. You know,
Mhm.
you can never call it, and never. You're never going to be able to know if it's going to do it or not until it does. You're not a fortune teller. You're just an analyst. But this is a perfect example of how far it can go while you're still in control of your risk. That's the important part of using a stop loss properly. Now, if I said I don't want to spend 800 on the stop loss, I want to do 400. Look how much more risk reward ratio I catch. 1 to 10. Damn, I'm that guy. Man, it clapped because I'm looking for risk to reward versus paying attention to correct analysis of the market that's in front of us, that's to the left, in order to calculate where to place a properly spaced stop loss. And so the reaction is, or the result is, our patience inside this drawdown gets rewarded like this. I don't know about you guys, but like I'm doing backflips in my mind. I'm feeling good.
While it's moving, are you able to kind of do you go down to like the 15-minute or the 30-minute? I know I had this question yesterday, but I want
Yeah,
to
like
see I want
sometimes
to
I do.
I want to see how you're basically managing to hold on that long, especially in this
Like
market. So besides structure, I want to know how you look at those candles and you're like, okay, that proves to me that it still wants to go up. How do you do that? And if you could do it as it's moving or as
yeah, I
we're
can do that right now. I can show you exactly how I'm thinking while the market is moving, like you're
yeah,
asking.
yeah,
Like
please.
the main thing is, let me see if I can go back here. Yeah, right here. The main thing I like to do, right, while the market, because while the market is in drawdown, while my position is in drawdown, I'm not thinking about anything up here. I'm not thinking about anything up here yet because
Okay,
I'm busy being patient and watching this. So here, right, we're on the 1 hour time frame. If you want to manage this, you go to the 15-minute, which is the correlation of the 1 hour,
correct.
right? So you go to the 15-minute and you manage this. So you come here and you say, let's go right here. Let's say this is all you're looking at, right?
Mm-hmm.
In order to get yourself out of the fire, as far as management is concerned, the first thing I'm going to do is I'm going to recognize this 15-minute order block. And I know that price is going to need to come back to that 15-minute order block, right? Eventually. Hopefully it does it before it hits my stop loss. We don't know this.
Yeah,
But what I need to see from this 15-minute order block is, let me see this, I need a better color here.
probably black or something.
Yeah, yeah, like that. We're shaded like that.
Yeah.
This 15-minute order block right here, that blue one, right? We're in drawdown. So like fight or flight mode sets in, you're like, damn, what do I do? All you could do is chill out because you've already made the plan. So you have to stick with it. The moment human intervention comes into the plan, you're already fucked. Don't move your stop loss. Definitely don't move your stop loss. Don't do nothing. All you could do is just try and breathe. For those who aren't experienced, it's very difficult to do that because you're in red. But before you entered this position, you should have already managed the risk size that you were going to enter with. How many contracts? That's up to you. Whatever makes you feel comfortable.
Mm-hmm.
But you've got to look at the price action that's in front of you. And for me, the only thing that will determine me feeling better is if price came back to this order block, right? And did a little dance here and then cracked above it and closed above it. That's what I'm looking for. I'm looking for a break of what to the upside for
Structure.
me.
Broken structure
I'm
and a
looking for a
retest.
break of structure to the upside. That's all I'm doing. It's all repeatable. It's all repeatable actions here. We're looking for a break of structure to the upside. Whether it retests that structure, cool, but I want the break of structure to the upside. That's the only way I feel better. And we want to see stuff like this, right?
And at that point, is it called a change of character?
At that point, yes.
Okay.
On the lower time frame.
Okay.
That'll you know what I mean? That'll break of structure is technically a change of character, but on a lower time frame that we're analyzing right here. A
Okay.
true change of character is really like on a higher time frame.
Okay. All right.
All right. But people call it a choach, a change of character.
Yeah.
Or they'll call it a break of structure. I
A
just go with
chocha. I like chocha.
choach. So now we just wait and look for this. Let's see what happens. We're in the fire right now. Boom. Boom. This is making me feel better. All right. Now we're here. So the second thing I do that now we're outside of here, right? This makes me feel good because it broke structure to the upside and these candles are closing really nice. You also have to pay attention to the sizes of these candles. You get what I'm saying? Look what happened from here. This is a strong candle up, right? Another strong candle up. Then it did a little dance here because what? This is resistance. So it finally broke structure here, and then it gave us a strong candle outside of that structure. That's very important to see. But that's how detail oriented you have to be when you're looking at it. And in the what's the word I'm looking for? In the heat of the moment, if you're not thinking like that, then your psychology takes over and you don't even see this shit.
Yeah.
You're just like, oh man, I'm gonna close it, man. I was already in the fire. Now I'm just gonna close. I'm in profit. Screw it, man. I can't deal with it no more. But if you were thinking clearly, like a technical analyst, you would know that this is a good sign for you to hold. And the only thing you should be doing next is trying to find out now what's in front of you as a trader on the chart. What's the next thing that I need to be looking for?
More order block and more
Well,
breaker structures.
we're looking for, instead of support, what are we looking for? Areas of what?
Resistance.
Areas of resistance that can get in our way of more profits. So you need to start doing like building blocks in front of you, that you need to start building the playbook live in front of you, because mind you, none of this stuff was here until it got there. This is all empty. So now that we're in the play, we're in the action, now we need to be actively managing it and looking to the left to see what's in our way. So the first thing that's in our way is this 15-minute order block. This is the first thing that's in our way. We need to get past that if we want more profits, or we decide to take profit at this level, and that's perfectly fine. It's perfectly fine to take profit right here and just be done. What's not perfectly fine is taking profit here when you didn't even know you had all of this up here. Because a lot of cats do this. They'll be in the fire for, this is about 3 hours worth of pain right here, if you don't understand how to manage it, right? And then once you finally get into profit, you're relieved. You're like, man, fuck it, I'm closing this shit. I can't take it no more. I'm out. Thousands of traders do it. I've done it. I don't need to do it anymore, but I've been there, done it. So I know what it's like because I've done it. Everybody does it. You're finally free of the pain. But you would make so much more profits if before you ever enter a position, you accept the risk and you calculate your risk. And we'll get into risk calculation after this, but we're focused on what it actually looks like. So from here, you want to see where areas of resistance are. Where are things that could take price, right? Where are things that could take price and make it come back? This could do that. This 15-minute order block could do that very easily, right?
Yeah.
I think so too. Like that would make me, if not take profits, take partial. Like I'll take a contract or two off. If I'm in like 5 contracts, 5 micros, I'll take a few off right there and then move to break even over here after I see market structure, which we're about to get into right now. So let's see what it does now. All we can do is wait and see, right?
Yeah.
We need, at this point right now, we want to see either strong pushes up or market structure start to develop in front of us that can be used as defense on the way back down. You get what I'm saying? Like this. Like if market structure starts being printed here and it comes there like this and then it goes up here, well, now this market structure here can be used as a line of defense for price to come back to and then jump back up.
Continue.
These
For
are possibilities
continuation.
for a continuation. Those are all possibilities. So let's just see where it goes so we can manage. All right. So we got our first line of defense right here. This is a bullish candle
Engulfing.
pattern. Bullish engulfing candle pattern. Sorry, I fucking had a brain fart. This is a bullish engulfing candle pattern right here. This is a great sign. You could do one of two things here. You can leave your stop loss where it's at, or you can move it to break even.
What do you do?
Right now.
What's your usual, what's your first plan in this case?
My usual is I like to move to half risk.
Half risk, okay.
Yeah, it's just
Once it creates
it's just
structure.
the way that I trade. Like sometimes, because I'll see some wicks like plow come down and then still go in.
Yeah.
It's just the way that I view the markets.
Okay.
The safe thing to do is after market structure has developed in front of you and giving you a line of defense, is just to move to break even.
Okay.
Especially if you've been holding in risk in this example for 3 hours. So you're like, you want to alleviate some of your psychological pain, just move to break even and you'll feel
Okay.
better. Right? For me, I just moved to half risk because I'm like, I'm in front of it anyways, and I already understand what's going on in front of me. So now, anybody got any questions so far with that? Okay, good. So now let's see what happens. What's it doing? All right. We're at the 15-minute mark, or the 15-minute mark. 15 minute order block here. What is price telling you right now?
It ran through it perfectly, so it's strong. Yeah, it's showing
Busted.
strong continuation.
Really strong. Busted through it. Like if I was at half risk, now I'd either move to break even or I'd place my stop loss up here. Right under here.
Now, and this is maybe helpful. I know it would be helpful for me. You see how it looks clean in that 15-minute? Put 5 minutes because some people manage 5 minutes. Now,
I'm
I'm
not
not
looking
saying
at
that's the
5
right
minutes at
way,
all.
but put 5 minutes so I could see what those two big blue candles look like in 5 minutes. Can you do that? Just click
Two right here.
Yeah, so click 5 minutes. Time frame. Yeah, see what
I
it
wouldn't
really
recommend
looks.
you use 5 minutes. You're looking at
Okay.
all of this.
Oh, okay. No, I was just
Like,
asking just to see what that looks
yeah,
like.
that's a waste of your time, and it's a lot more data that you have to sit there and psychologically analyze.
Yeah.
Why do that when all you have to do is manage simple, clean candles?
Okay.
You get what I'm saying? You want less noise so you can think clearly.
Makes sense.
The lower the time frame, the more data you got to analyze. And if you're not experienced in analyzing that data, you're going to either fake yourself out or fake yourself out. You get what I'm saying? If you don't know what you're doing. So I suggest 15 minutes enough. Don't worry about nothing else because remember, guys, we're trading on the higher time frame. The only reason I'm looking at the 15 minutes so you guys can see what it looks like. But really, this is a 1 hour play. Like, imagine just analyzing these candles. You think you got a headache on your hands? Or are you just like, I'm the man? These are smooth candles. Like, we don't got to worry about nothing. But we'll go back to managing. And managing is on 15 minutes if you want to look for things, especially moving your stop loss. So now we're there. Right here is an area of taking profits. I would literally call this out to you guys to take profits right now. This is like TP1 right now, to be real.
And is that your main reason because of a resistance area, or is it already
my thing is I would have already calculated this out. So like,
Okay.
let me see if that's even 800 ticks right here. Yeah, TP1 would have been right here. This is TP1 right around here, like 800 ticks right here. I would have
Basically,
already calculated that out, and we're gonna get into that next, but we're still in managing right now.
okay.
So we have an exit, right? We have an exit that's plotted. What's gonna help us get to that exit? How are we gonna stay in this play long enough to get to that exit? What do we need? What do you guys think we need? Nothing crazy. This is not complicated. What do we
Well,
need to see in the market?
break and retest structure.
We need a break. We definitely need a
Yeah.
break. What do we need a break of that's in front of us?
Break a structure.
Yeah,
Mhm.
absolutely. This right here. And then there's a 1 hour order block staring right at us. All you have to do when you need answers is just look right at the chart. The chart will tell you
Look to the
everything.
left.
It's right in front of us. That's why it's so simple when I trade, because I just look at the chart. In order for us to get to here, which is a distance, guys, okay? That is a distance. In order for us to have the confidence to get there, we need to break above here. We need to break above here. We need to break a structure, right? That's all we need. Break a structure, come back, and
Retest.
continuation. That's all we need to look at. Keep it nice and simple, guys. Nothing crazy, no rocket science. Now let's see what it does. You don't know what it's gonna do. Matter of fact, I'll go to the 15 minutes so you can see the manager. Let's see what it does. All right, we got resistance. Shit will make you nervous, huh?
Yep.
It tested structure there, right? Or no?
Really, it just made a little pullback. We see that see that right there? When you start seeing it like that, you know, doing
That's
that.
true.
Remember, this is the break of structure line right here, right,
Uh-huh.
guys?
Mm-hmm.
So now we're seeing that it broke above structure.
Strong.
This little orange candle right here is the retest of structure and a continuation. It's all in everything happens fractal in trading. What happens on the higher time frames, the same thing is gonna happen on the lower time frame.
What do you do on just below that? You see how you're lower low on that area before it broke the 1 hour? What do you do with you see how
Yeah.
it broke? Yeah, that little area. How do you manage that mentally, knowing that it's still gonna go up or it wants to go up? In this case,
Well,
it's showing
we
that it
don't
wants to go
we
down.
don't we
You
don't
don't?
know what it's
Okay.
gonna do in live market. You don't
Mhm.
know. The only thing that you can manage is your psychology and being calm, right? But the only
Okay.
thing that's gonna help you with psychology is understanding market structure. And this market structure right here, in this example, is telling you that it's found resistance once, found resistance twice, and came back, right?
Uh-huh.
This part right here is what makes most traders nervous. Why?
Okay.
Why do you think that is?
Well, I mean,
Very
right there
simple.
because it actually
Very
broke
simple.
the lower low there.
It broke the
That's what I
structure over
noticed.
here.
Yeah, broke structure.
Did a
Hmm.
break of structure here. What? It's just a repeat of everything we're doing. Like
Hmm.
this would make traders nervous, right?
So it happens. Uh-huh.
The only way to hold here is to have patience and to go here to the higher time frame. All right, get rid of a bunch of the candles that are in your way. Just stay on the higher time frame and look for this. This makes you less nervous, in my opinion. I mean, for me, it makes me less nervous because we're looking at this. It's okay to close here. It's perfectly fine to close here. There's no problem taking profits here. This is a really good. First of all, it's 800 ticks. You think this is a bad day? This is not a bad day. This is a great day. From here to here is 800 ticks, boys. Like, banger. And it's perfectly fine for you to see these candles and get nervous and close. The thing is, you want to wait for the candles to close to show you what it really wants to do. And in this example, this just happened to be a fake out close to the bottom because the very next candle does what?
Yep, that
Goes
happens
right
to me
up.
all the time.
And now what this did is create a bullish engulfing pattern right here in front of you. So if you didn't let this scare you, you could bear the fruit of what's coming for you. It's all about patience and holding and
Believing in the play, basically.
yeah, in the play.
Yeah,
I'm talking
right.
about the play. It's all about being patient and just you gotta wait. You gotta wait for the candles to close. Like this will make you close. You see this little wick that's right here? This was bearish before it went bullish.
Mm-hmm.
It opened over here. It pushed down again. I'm sure it closed off a lot of people that were in a position here. And then it continued, and then it printed a bullish engulfing pattern. That right there, you're just holding after that. You don't have to really worry about much. Now you're in it. You know? Now you're just like, oh shit, everything's bullish. What's going on here? You know what I'm saying? Now look,
Oof.
okay,
Broke
everybody's
structure,
scared.
retested it.
Everybody's scared, but what did it do?
Retest.
You just said it.
Yeah.
You just said
Came
what
back
it
to
did. What did it
retest
do?
that structure.
That's all it did. It broke
Yep.
over here. It broke structure to the upside, right here.
Mhm.
Price broke structure and then did what with structure?
Tested
Retest
it.
structure. And
Retested
as
it
soon
and
after
closed above it, which is another important thing, right? The body of the candle, how it closed above the structure. Even
well,
though
I mean, those comes in so many variants, you
Mhm.
can't really call it like that. Like it's
Okay.
all about like looking at it overall.
Okay.
Like this could have been 3 candles. You get what I'm saying? This could have been 4 candles. Or it could have just been 1 wick and gone off 2. There's so many variations of how this happens that you just can't count on that. You have to count on the fact of market structure. That's what you want to count on. This was, let me move this over here. This is a break of structure here. It broke structure, ran up, came back and did what? Retest the break of structure, and then look at the candle that printed right after.
Bullish engulfing.
This is how you manage things. And that's why it's easier to manage things on higher time frame because you get to see the bigger picture overall. Let's go to the 15-minute and see what this madness looks like. You get what I'm
Shit.
saying?
With those
Like
wicks.
this is making a lot of nervous. Like looking at this will make you nervous if you're in the long play. If you're looking at this right here, all you're seeing is a break. You get what I'm saying? Like, oh man, I should close right here. And then it drops. Prints more profits for you that you're no longer in. When all you gotta do, stay right here, manage the smooth chart, keep everything nice and clean. The only time you want to really go down to the lower time frame is if you can't see anything here. It's not giving if nothing makes sense to you on the higher time frame, then go to the lower time frame. Start off with the 30. Go looking for clues of what could possibly happen. First thing you always want to do is mark off your breaks of structure. Boom. So now that you have places of defense, since you're holding your position from here, what's going to protect you? This is. And if this fails and price does come here, hey, you're fucked. You're basically fucked. Or it's coming here to test this 30-minute order block. You don't know. Your job is just to find places to take profit and stick to your plan. This is your final take profit. What it doesn't mean is going to shoot all the way straight up there in one go. Now, is it? It rarely ever does that. Sometimes it does. You get lucky on an NFP day, but That doesn't happen every day. Your job is to manage this. And all this is saying to us right now is that we've got continuation. So let's see how far it goes up. Another. You got another break of structure. Boom. So you just take paint it. Always paint it. Paint it and save your charts. You get what I'm saying? Like mark them shits up as you're working. So that you can see your play, your X's and O's when you're managing your trades. That's a bit. You get into those habits, man, you guys are just gonna keep printing money right next to you. And we just watch it, see what happens. Go all the way up. Almost there. So what would you do here, guys? If this is your take profit and price came up here and slid down, what are you doing? There's no wrong answers. Just what are you doing?
I will let it tell me. I would wait for another break of structure. That's what I
Fuck
would
that. I'm taking profits.
do.
And that's coming from me. I'm taking profits. I don't care what's happening. I just went through all of this managing. You think I care about a few extra pips just to be perfect?
I
No.
like that. That's great
Trying to
advice, to
be
be
perfect
honest.
in trading will always give back profits. Sure, the next candles probably could go up there, but who cares? You just did all of this.
That makes sense.
You're
Yep.
worried about a few more ticks for that? I'm closing that. I'm gonna pour me up some whiskey. Cause
Yes,
holy
sir.
shit,
Look to your left real quick
we're
to
done for the
see.
day. So let's
Look
see
to
what
the
happens.
left, Blue. To the left to see
Uh,
if there's any structure on the left. There's none.
over here, there's
Of the
this.
20, no, the 27% where you were trying to take profit on the
Oh,
top. Is
oh
there
yeah.
any
You want to
structure
see?
above that? No. Okay.
No, not back there.
Okay.
Not
Sky
back
blue,
there.
baby.
Not that I can see.
You
But
just
let's see
had
what
that
happens.
was your basic plan. That's the reason why you would have took it. You're like, I'm that close. Let me take what they give me. That's it.
Just like I used to be like that, where I'm like, damn, it didn't hit my take price. I ain't closing. I'm holding. I'm holding. I'm
And you give
holding.
it all back.
All of that. Back.
Bro,
It
I remember
happens every
one
time,
day.
dog.
I'll never forget that shit. I saw it
I'm
stay up
talking about.
7
I'm talking about
bandos.
feeling. I'm
Give
feeling
it all
so
back.
sad. I'm feeling so sad, dog. And then what happens after that? You go on tilt and you start chasing that run again, trying to be super manager. You already failed. Failed. Should have just took profit. Like for me, as soon as it starts sniffing my lines, closing. But we don't know what's about to happen now. Maybe a hit take profit. Let's see what happens.
Has it?
Boom. Boom. The hit take profit. But you're telling me that you're gonna wait 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11,
That's
12 more hours.
crazy. That's another day.
What do you mean?
That's
Who's doing this?
that's
Who's
another
doing
day.
this? I'm not doing that.
That's
As
another
soon as
day of
4
work.
hours? Yeah, but I'm
this is
dead.
where I would have took profit, guys. This is exactly where I would have took profit. As soon as I see this bearish engulfing pattern in my area of exit, I'm closing right here. I don't care about anything else. I don't care about anything else. I am perfectly fine taking profits right here. I did it. I completed my journey. This is my mission right here. This is my mission right here. This was my mission, right? My mission was this, the blue zone. That was my mission. I don't care about nothing else. Oh, that's too slow. I don't care about nothing else. You're telling me each one of these candles are an hour, and I just managed all of this, and I didn't take profit right there when they got that close? Plug out my face. I'm exiting. First of all, I'm tired. First of all, I'm tired. Then did all this.
Time.
Tired. I'm done for the day. So that's it's a good point to bring up because a lot of traders like being so perfect and meticulous it will actually ruin you in the end. Because
Yep.
trying to be so perfect works against you in trading. You have to be nimble. You have to be flexible. You have to accept the fact that it's not going to do exactly what you tell it to do. First of all, it never does what you tell it to do. The market tells you what to do. And as long as you accept that, you can do plays like this, like we do in the VIP all week long, all the time. It's crazy what we do in there. Sometimes I can't believe it. And I'm the one sending the setups. But it happens every time. And I wake up and we see what's happening. We got 900 ticks over here on NQ, 200 ticks over here on ES. And all we have to do is wait and manage. Just like I just showed you guys right now. But the only way you're going to be able to do that is by managing first your risks. Everything starts right here because this is the pain of psychology right here. This is the nuts and bolts of it all. Your entry and your risk. You have to be able to control your risk factor, and you have to be able to get really good at finding entries. Because there's guys that enter longs up here. Imagine entering this long. Imagine entering that long, guys. Like, this is where you entered for a long. And every day you enter long like this happens. You just get clapped. You think you're going to trade for long? No, you're going to go work at Publix.
What?
Like, you're no longer going to be a trader after 30 days of shit like this. Because you're not letting the market tell you what to do. Instead, you're trying to tell the market what to do. You end up like this kind of trader. But if you do what I'm showing you how to do and how to really look at it, you end up like this kind of trader. I can promise you that much. If you approach it and view it like how I look at it, you're going to do this a lot. It's not going to happen in the beginning, but if you give it enough time and you open your mind to being flexible and accept the fact that you cannot tell the market what to do, you have to respect it, and the market tells you where you should be and where you should place your stop losses in order for trades to breathe and not have a fixed stop loss mentality. You're going to win more. Because if you approach every stop loss, oh, fuck that, I'm going to do 275 ticks on all my stop. That's not what the market said. It's not what the market said you could do today. Today, you got to be at 800. And if you can't be flexible and accept that you have to be at 800 tick instead of a 275 tick, if you can't be like that, you're going to take way more losses than wins, and you're not going to make it in the long run in this game. Because the most important part about this game is having a clean mindset and being flexible in your decision making by analyzing the market properly, letting the market tell you what your play should be for the day. Does that make sense?
Yes.
I think that makes sense. The market's going to tell you what the play is. Like, I don't tell you guys what the play is, even though my plays are pristine. Sniper action. I didn't make that play. The market told me to do that. As crazy as that sounds. The market told me to trade like that today. That's what it is. You have to accept the fact that market is big mama, okay, and you're the baby. Let's go make this money. If you can get your mindset to think like this, you're going to be such a better trader than 90% of these cats that are out there. I promise you that much. So, on the next section of this, we're going to determine what your take profit levels should be. Right? How do you determine take profit 1, 2, and 3? Well, the first thing, in order to determine that, you have to determine your risk. Where's your stop loss? Your take profit is non-existent until you understand where your stop loss goes. Everything else is irrelevant until you understand where your entry and your stop loss goes. After this part, entry and stop loss, then you can start calculating everything else. So for us here, we had a 800 tick stop loss, right? And this is very simple. I keep it very simple like this for a reason, because sometimes we got to move fast. And in reality, the markets move 1-to-1s, 1-to-2s, 1-to-3s all day. So all you have to do is, if you've got an 800 tick stop loss, that means your first take profit can either be 400 ticks or 800 ticks. The decision is yours when it comes to the first take profit. I like to do 1-to-1s, so I'm just going to keep it on 800 ticks on the first take profit. And this will be your first take profit right here. Very nice and simple. This is your first take profit area. And if you notice, this first take profit area here is excellent. Why do you guys think this is a great area to take profit? What makes you think that this is a great take profit? Because I think it's an excellent area to take profit. Why do you guys think that?
Well, that's where the structure is.
That's where we have resistance up above.
Yeah.
So just like in this example, like I said up here, who gives a shit if it's perfect up here? We're taking profit here, not
Right
here.
before. Right before.
Right before the madness.
Because most people do that or wait, and that's where it
Yeah,
gets.
and it's perfectly fine that you do. You can set a take profit right here. But when I measure things, I measure it like this mathematically: 1-to-1s, 1-to-2, 1-to-3. Because
That makes sense.
the market tends to move like that. So that's take profit 1. Take profit 2 is going to be 1600 ticks. So now we have our 1-to-2 area, right? This was take profit 1 right here. Where's the liquidity? Boom. That's take profit 1. This is take profit 2, right? Mind you, I'm showing you how to map these out before
The play actually happens.
the play actually happens. You're mapping this out way before even this gets here. None of this exists, guys.
And it's crazy. You're not even using the fib to give you those numbers. You're basically basing it on what your risk is. Yeah.
Yeah, my risk is the fib only gives me my entry, an idea of where I can place the stop loss if I don't have any market structure to go off of. And the fib will give me a final fib extension if I decide to be, King Kong that day and I want to hold all the way. But we'll get our main take profits from the distance of what our stop loss is.
What would, if I could
Okay.
ask, what would be your advice for someone that is not having 3 or 4 contracts like you, right? I ain't talking about the amount of money. I'm talking about the contracts because you say, "Oh, I would trim here," and I think that was an issue for me, knowing when
Only
to take
trim.
profits. Because if I only have one contract, because I'm managing that way until I
Yes.
learn the strategy, then how do you take profits at that point? You just close that position, take the 25 bucks. Is that what
Yeah,
you do?
if you can only you have to go with your flow. If you only have one contract, there's nothing wrong with that. You have to remember that you're just starting out as a trader, right? And I'm not just zeroing you out in
Yeah, yeah.
general. When you're just starting out as a trader, you should not be giving a shit about money. Because the money, the real money, is not going to come right now. It's going to come later. And where do you guys think the money is hiding in trading?
And the compounding, consistency.
Yes, but where is it hiding? Where is the money? Like, think about what I'm really asking you. Where do you guys think the money's at? Do you think the money's on the chart? No, the money's in the process. The money, okay, the money is in doing the same things every day, reading the market structure properly every day until you become consistent. Fuck if it's just $25 or $50 or $30. The money is irrelevant because all you're really doing is building up the educational and technical consistency to master the markets in order for your pockets to catch up to your intelligence. Does that make sense? You're just waiting for your pockets to catch up to your intelligence, meaning it's only a matter of time for you to change a $25 profit to a $2,500 profit to a $25,000 profit. And what do you think the difference is between somebody who makes those different things are? Those different levels of money is? What do you think the difference is?
Time.
Time. It's just a matter of time, guys.
Yes.
It's just a matter of time. It doesn't matter $25 today, but if you made $25 today and you made it correctly, then you can make 2,500 when the time is ready and your account size is proper. It's all a matter of time. But the money is not in front of you. The money is in the process. It's all in here. It's all in this shit. Mastering market structure, understanding the discipline of where your entry should be and why it's so important to have a proper stop loss placement to allow the trade to breathe and to be able to have the discipline to manage this risk properly. Don't be greedy. Understand base hits are very important. You don't got to put it all on red every play. You'll never last. It's all about building the bag step by step. I wouldn't worry about a damn thing. Like if I was starting how to trade today, I wouldn't worry about money right now. I just worry about mastering the craft. That's why I got so good because I knew I wasn't gonna make money up front. Crazy, you know how many accounts I've blown? Thinking I was gonna make money up front when I first started, I was like, oh, I can't think like that. But the most difficult thing to do is detach yourself from the money because that's all we think about inside. But the reality is, if you sit there and separate yourself from how much money you're making right now and just think about how much money the true potential is in this game, if you could just master this strategy, then you'd be sitting pretty. Like I don't give a shit. I'm not rich by far. There ain't nothing rich about me. I'm a regular guy. But let me tell you something. I'm about to be rich because I know what the fuck I'm doing, and I know exactly that it's just a matter of time. I'm
I know
doing
that's
exactly
right.
what I said before. I'm literally just waiting for my pockets to catch up to my intelligence on these charts. Because I'm doing all the right fucking things constantly on a weekly basis. So it's only a matter of time for me. That's why I be chilling. I be out the way. Nobody sees me. You know what I'm saying? Fuck that. This is the best way to get rich quietly. But all you got to do is focus on the process, the basic things, the simple things. You see how I make it look simple as it is? This is really a complicated situation.
Huh.
If you were just dropped in the middle of the market and you've never taken any one of these classes or had me explain something to you, you would not know what the fuck to do. Nobody would. But I've taken all of the shit that I've learned throughout the years and I've simplified it. And I learned that in my journey, I ran through so many complicated strategies. And even Fabrice is there. He said me a few of them things where I was just like, dog, that shit making my eyes cross. I don't know what he said right there. But when I realized that it doesn't need to be that difficult or complicated, trading can really be simple, it was over for me after that. It was dog. I just started taking off. I'm gonna tell you that. And you guys can too if you could just get over your own situations. Because everybody's got their own psychological issues when it comes to trading. Most of them have to deal with risk. Most of them have to deal with the fact that everybody just wants to make money because everybody needs money. But that's not how this game works. This game is going to respect the guy or the trader that puts the time in first and masters the process. You master this process, you're going to get this shit. all day. Well, not all day, but all week for sure. You're gonna get that all day. This right here, this can either be $100. It can be $1,000. It can be 10,000. I've seen it all. In the exact same move, this can be $100,000 in this exact same move. It does not matter. The only thing that matters is the account size. But you need the intelligence to manage an account size like that. And the intelligence is mastering market structure, breaks of structure, price action, understanding that the higher time frame is where the power is at. All you got to do is look over here and understand that what are we doing? We're going up. So what are we going to do? We're going to go up. This shit can be easy. You just got to get out of your head, because that's what we do a lot of the times. We get in our own way and we make it more difficult than it needs to. But I'm going to tell you one thing. I know the way. I'm telling all y'all that right now. I know the way. I'm telling you, I know the way. And it's this simple. See how simple I made it look today, guys? That's how simple it can be. Is it? Anything else we missed? I don't think we missed nothing else. So we got risk. We got how to make your how to calculate your take profit zones, and how to manage risk. Right? In here, as far as the red zone is concerned, this is all about what you're willing to accept, like I've been saying before. It's all about what you're willing to accept. If you can't trade an 800 tick situation, right? Let's say this 800 tick situation, like if you're on a prop firm, what is it going to be? Let me see. Let's see here. Let's say that's MNQ, right? This is here. So we're doing 28,975, 28,900.75. That's the entry, right? And then stop loss would be 28,750. This is on future, right? Fuck did he go? Did it disappear?
No.
You guys see the brackets?
No.
Oh, here we go. That's why. My bad.
Oh, because it's at 29. That's why.
Yeah, because this is the market in the future. We're looking in the back. All right, so we're right here, right? And then this take profit was meant for 29,734.50. All right. So this right here, guys, is what your potentials are, right? This is what we're looking at. This is the play. This was the play we were looking at. So, do you guys have a problem with risking $400 to make $1,600?
I don't got a problem with that at all.
See that?
That's one contract.
That's one contract?
That's one contract.
They got a lot. It going down and breathing on that SL is scary though.
It's very
That's nerve-wracking. That's
scary.
nerve-wracking.
It can be scary, guys. It can be scary. But the thing is, it's all about confidence and believing in the strategy. The only thing that would make me hold this is me saying, fuck it. I've done this countless amount of times. I have a high probability trading strategy. It works.
Mhm.
Fuck it. I'm willing to risk $400 on a prop firm to make 1,600.
Hell yeah.
I mean,
Shit.
I mean, am I wrong?
Nah,
I think so.
fool. You right,
I
my guy.
think I think this is a great situation. You get what I'm saying? But you have to be willing to the experience and the time that you put in is what gets you to this point.
Negative
You get what I'm
62%.
saying? It's what gets you to this point. Like, not everybody's gonna hold all of this. You could get out right here. You get out right here, dog. At that order block. I have no problem with that. Risk 4, you made 500 for the day. Hey, one to one. That's a 1.1 R ish. What does it say right there? There you go, 1.3 R. Like, that's 500 for the day. Now, sure, you risk 400, but that shit high probability, dude. The high problem. I'm putting it on the line. I'm telling you right now, I'm putting it on the line because I believe in myself. And when you get to the point where your confidence is that high, you don't care. You just know, and your only conviction is coming from your ability to analyze the market properly. You're not gonna care. You're not gonna care, and you. I'm not saying you're not gonna care and put it all your risk on the line, but you're not gonna care to the point where this bothers you because you know if this one don't work, the next setup may work. And because you have a high probability win rate and a high win rate ratio, like I do, and when you get to that level, it just becomes a smooth decision. Your decision making becomes smooth. You're not thinking too much. You're only reacting off of the analysis that you see on the market. Like that's what moves me. Like I would have took that shit right there too. I said, shit, I'm on 500. It's only 9:30 in the morning. Going to the gym. Well, I'm gonna go get some pancakes. I feel great. You know what I'm saying? You're not gonna care. But that's how these are the rewards that you reap for respecting market structure and just believing that market structure is respectful. And it is. The market respects structure. It printed it its damn self. There's a reason why it printed it, because it needs to come back and respect that. We're gonna be there to catch it. Damn near every time, ain't we, Tom? Damn near every time. And if it leaves us, which it does sometimes too, sometimes it leaves us at the train station. We don't get no ride that day. That's fine with us because we know that eventually there's another setup. And that's it for today. You guys got any questions? Anybody got any questions? We can review things right now.
I like it. I like it a lot.
You said what?
He said,
I like it. I like it a lot.
I'm good for now.
Oh, the
Yeah.
positioning tool? Yeah, sure. The positioning tool, you can always find. Well, for me, I have my toolbox here, right? This is my toolbox here. I made this toolbox designed for most of the tools that I use on a daily basis. So the long positioning tool. Oh, another cool feature too. We can go over here. I'm gonna use it over here, right? Check this out, guys. If you guys didn't know this, one of the members in the chat showed us this the other day too. Like you can use this positioning tool, right? Let's say you don't want to use the buy box or create the order box over here in the futures, right? You could grab your long positioning tool, place it where you need to place it, right? Let's say it's right here. And you could just right click it and create a limit order right there.
Shut the fuck up. That's great. Oh, wait, this is Trading View? What is this shit?
This is TraderVate, Trading View, dog. Look how clean that is. I didn't do nothing. I just put it on the paint. I put it on the chart. And look, if I want to go up on contracts, I just up the contract. And it just does it right there. And I painted it from the positioning tool. That shit is fire. You know how fast you can work like that?
Yeah.
That's dope. I love that. And all you gotta do is, like I said, right click, go to create limit order. Ding. And now once it does that, make sure you hit the buy button, confirm it. And it's just there. All you gotta do, like you put it wherever you want to. Like if you see it. Like some guys that want to type numbers, just put it where you want it. You want it up there, you got it.
Based on
Create the
structure.
limit order. 300 for 1100 on the screen. That's perfect. All right, so what were you asking me, Emilio? How I set it wherever I want to set it?
I'm gonna
Oh,
get
that's perfect. That's
I'm gonna
easy.
go
It's
ahead and
just
go
like
get ready. Thank you, Jose. Is there anything else that you might go over, or you're just gonna go over this
nah,
for we're good?
nah, you ain't got no question. I'm just answering questions for everybody who wants something
Okay, guys. Have a good night. Thank you
clarified.
for training.
For sure. I'll see you guys Tuesday.
Tuesday. Let's do it.
Yeah. This is the last class for the week.
Sounds good.
All right, so we place the position here. Like once you decide, yeah, like it's like if you don't see it here on because this is my toolbar, right? So for you, you would go over here in this toolbar. This is the one that comes on all the charts, right? You would go right here, select that, and just place it wherever it is that you want it. Sometimes this magnet is on, so it gets a little tricky. So if you deselect the magnet, the positioning tool moves a lot more fluid. If the magnet is on, then it starts snapping into places. And you can't really move your stop loss where you want because it goes where it's attracted to, which is the highs and the lows or wherever the wicks are. So you got another question about that? Okay, perfect. Yeah, the same thing goes for the short side. Same thing. When you want to move the stop loss, you grab it from right there. When you want to move the take profit, you'll see the dot right there. And you just move it. And then if you want to create an order, oh shit, it's right there. That's perfect. Like I like that little feature. That's good for this recording. We're gonna stop recording here. This is a great risk management class. I think so. We're gonna catch you Tuesday night at 8 coming up.